I think one of the biggest problem why you've been consistently losing money to the market is because you can't tell the true direction of the market. So in this video, I'm going to help you fix that. I'm going to show you how to tell the true direction of the market without using any indicator at all. Before we talk about direction of the market, you need to understand where the market is coming from. For example, if the market is making a higher high, higher low, higher high, higher low, you know that the market is bullish. When you see the market making a lower high, lower low, lower high, lower low, lower high, and lower low, lower high, you know that the market is bearish. After knowing the trend of the market, the next thing you have to do is to mark out your trading range. For example, on this bullish side, from here to here, let me use this, to here is my trading range. This is my trading range. Then on the sell side, from here to here is my trading range. You understand? So now on this bullish side, if I mark my trading range, is to mark my point of interest, which is here on this bullish side. I know the market broke this structure here and then it reverses back to this point. So as it's reversing, this is my point of interest, depending on what the market show me here. That is what will make me to mark here as my point of interest. And on the sell side, as the market is reversing, depending on what the market shows me here, that is what will make me mark here as my point of interest. So now, after marking your point of interest, the next thing to do is to just wait. You have to wait for the market to come to this your point of interest. Then you now switch to a lower time frame when the market comes to this point of interest, for you to either buy on this uptrend movement, and then for you to sell on this downtrend movement. So here I'm going to wait, for example, on the 5 minutes or 1 minute in this point, and then I'll see on the lower time frame like a break of structure to the upside. Then as the market reverses back, that is when I'll buy, targeting here. And on this sell side, as the market comes to this point on the lower time frame, when I see a break of structure to the opposite side again, I will then sell and then put my take profit here and then my stop loss here. That is how to tell the true direction of the market. Now that you have understand the idea behind how to tell the true direction of the market, let me now show you on the real chart how all these things implies. As we can see here, this is USD CHF. Let me go to higher time frame, like 4-hour time frame, for example. On this 4-hour time frame, what you can see here is that the market is bearish, right? The market is bearish. Look at here. A high, a low, lower high, and the market fall down all the way to this point, making a lower low. So here, the market comes here to mitigate this movement here. You see all these fair value gaps that you can see here. So the market reverses back to this point to mitigate this movement here. With what I can see here, I know that the market trend is bearish. So as the market is bearish, what I have to do is to first of all mark my trading range. So where is my trading range here? This is my trading range here and here is my trading range. After I know my trading range, let me remove all this drawing. After knowing my trading range, okay, I will not remove the drawing. Let me just leave it there because I drew it here for my analysis. When I was analyzing the market, that was when I drew these things you see here. So after knowing my trading range, the next thing is to mark out my point of interest. So now I know the market took this low and it fall down all here. And as the market was falling with a high momentum, I know all these fair value gaps I see here, they are points of interest. So I will be taking a closer look on this point when the market reverses to all these points for me to see the behavior of the market. So the market comes all the way to this point and then it chooses to reverse to this point here. So after taking this low, after taking here, let me use this. After the market took this low, I know, okay, the market will have to come back again to this point before the market will sell again massively. So that is how to tell the direction of the market. So now let me give you another example using GBP USD. On this GBP USD, on the lower time frame, you can see that the market is confusing. You can't tell if it is bullish or bearish. You can't tell either of the trend. So what to do is to go to 4-hour time frame, for example, here now. And as you can see on this my chart here, you see a lot of drawings to show you that, okay, I was analyzing the market. So when I was analyzing the market, for example, the market was making, this is a low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So after this low and low, after taking here, the market tried to go back and it still drop again, giving another low and low again. So after this low and low, the market go all the way. Instead of stopping somewhere here and fall back again, it choose to break and mitigate this point here. So breaking here, because the market has already taken this low, let me show you here. After the market has taken this low here, if the market take this low that you can see here, after taking this low, this is a break of structure. So the market not supposed to come and take this high. So anything that makes the market to take this high, I know that this is a change of character. Let me mark here again. This is a change of character here. Once the market take a low and it takes this high, this is a change of character. So I will be expecting the market to come to mitigate this movement here before it goes up. But what happened? The market, after going up to this point, it falls back a little here. Instead of mitigating, it refused to mitigate and it continued going up. So going up, taking this little side again, doing something like this, it went up, taking here again. I know that, okay, the market is no more interested in coming to this downside, so it wants to go up. So after doing this, it reverses a little. That is where you have to buy. You buy here and then see the market going up. After taking here again, the market falls back to mitigate this movement here, and then what happened? The market flies up again. So this is how to tell the true direction of the market without any indicator at all. So now let me give you another example. If you have not fully understand what I'm trying to say, okay, let me use Euro USD for example. Now on this Euro USD, this is 1 hour time frame. With what I can see here on the chart, I see that the market is bullish because I see a higher high, a higher low, a higher high, a higher high, higher low, higher high, higher low, higher high. So all these places, all these fair value gaps you see here, these are points of interest where I know that the market will have to come and mitigate when it wants to reverse back to all these points, when it wants to mitigate here. So now with what I can see here, where is my trading range for the moment? Right now I can mark here as my trading range. I mark here and I also mark here because this is the current low I can see here. I mark here also. So after marking here, the next thing I have to do is to mark out my point of interest. So this is my point of interest. I think I'm going to make another video showing you how to tell a true point of interest. So I mark here as my point of interest because I know there is a fair value gap here. This candle and this candle, they do not touch each other, so there is an imbalance within here. So the market will have to come back to mitigate this movement here before it will go up again. Or if it breaks to this downside, I know there's a change of character. So I'll wait here. Then after marking this point of interest, the next thing I have to do is to go to the lower time frame. Only when the market try to come back to this point, when it comes back to this point and is currently on this point, for example, that is when I will now go to a lower time frame for 5 minutes to see if truly the market wants to go up again, or if you want to continue falling down to change a character. So when you change to the lower time frame, for example, this is a high, a low, a high, and a low. So telling you that in this 5 minutes time frame, this is a change of character. So I'm expecting the market to go to this upside before it fall down for it to go to that point of interest. So when the market wants to change direction, for example, it's going to give you a break to the opposite side, then it will have to reverse a little, and then it will fall back again. So that is how the market always moves. So guys, this is how to tell the true direction of the market without using any indicator. Here are the things to do. Any chart you open, first of all, go to the higher time frame, for example the 4-hour time frame or the 1-hour time frame, for you to see the overall trend of the market. Then after knowing the trend of the market is to draw your trading range. After you draw your trading range, then you mark out your point of interest. Then after you mark your point of interest, is for you to wait for the market to come to your point of interest before you go to the lower time frame to see an entry opportunity. So guys, that is how to tell the true direction of the market. One thing to remember: don't trade blindly. Unveil the secrets of how to trade with Trading Unveiled Academy. If you found value on this lesson, like this video, subscribe to this channel, and I would like to see you on the comment section. In Trading Unveiled Academy, we unravel the hidden mysteries in the financial market and demystifies the complexities involved in trading.